All right, let's dive into the latest numbers from EuroSports Global because there's something really interesting going on here, a real puzzle for investors.
Yeah, so first things first, what does this company actually do? Well, you've got to think of it as having two completely different personalities. On one side, they sell these incredible high-end luxury cars. We're talking Lamborghinis. But on the other, they're pouring money into building a brand new electric motorcycle brand from the ground up.
And that's where we hit this really weird contradiction in their latest financial report. I mean, check this out. How on earth does a company's revenue plummet by over 20%, but at the same time, its losses shrink by a massive 75%? It just doesn't seem to add up, right? Exactly. It feels like it goes against basic business math. But don't worry, we're going to break it down. Let's start with that bottom line. Okay, so take a look at the big picture for the first 9 months of their fiscal year. On one side, you've got revenue, down. Not great. But then on the other side, their net loss is also down, and not just by a little bit.
Yeah, and that revenue drop is nothing to sneeze at. We're talking a 22.6% slide. To put that in perspective, sales fell from around $44 million down to $34 million. That's a huge $10 million gap they had to deal with.
But, and this is the crazy part, look at what happened to their losses. A 75.1% reduction. I mean, they went from losing almost $6.8 million to losing just about $1.7 million this year. So even though they sold less stuff, they got way, way better at not burning through cash. So the big question is, how'd they pull that off? Well, it boils down to a two-part strategy. First, the cars they did sell brought in more profit per car. And second, they got really aggressive with cost-cutting. I mean, they slashed administrative expenses by over a third and cut marketing by almost 30%. They just tightened their belts, big time. And you can see the results of that right here. Look at the gross profit margin. It jumped from 12% to over 15%. What that means in plain English is that for every $100 they made from selling a car, they kept an extra $3 in gross profit compared to last year. It might not sound like a lot, but when you're talking millions in sales, those dollars add up fast. Okay, so to really get what's happening with EuroSports, you have to split the company in your head. It's really two businesses in one. You've got the flashy, high-end car dealership, and then you've got this brand new electric motorcycle startup. And this table just lays it all out, crystal clear. Look at the automobile segment. It brought in basically all the money, $34 million, but it still lost about $1 million before tax. Now, look at sustainable mobility. That's the electric bike division. It made a grand total of $2,000 in revenue, but it lost over $500,000. It's not about making money yet. It's all about investment. Exactly. So here's the story in a nutshell. The luxury car business, even when it's just treading water, is basically paying the bills for their big bet on the future, electric motorcycles. And we should be clear, this electric bike isn't just a fantasy. They're hitting some major milestones. The bike has a name now, the Lambda Scorpii. And huge news, it passed European Vehicle Certification. That's a massive deal. It was even featured in Singapore's National Day Parade. So the big date to circle on your calendar is 2027. That's when they're hoping to start rolling them off the production line. All right, but let's be real. This is an explainer for investors, so we have to talk about the flip side. We've seen the potential, but the financial report is also waving some pretty big red flags that you just can't ignore. And this is probably the biggest one. This quote comes straight from their official filings. When you see language like material uncertainty about the ability to continue as a going concern, well, that's accountant speak for Houston, we have a problem. So what does going concern actually mean? Think of it as an official heads up from the auditors. They're saying, look, there is a real risk this company might struggle to pay all its bills over the next year. It's not a death sentence. It doesn't mean they will fail, but it's a serious warning that can't be taken lightly. And it's not just that one warning. There are a few other things piling on. The auditors gave what's called a qualified opinion last year, which is another sign of concern. They're particularly worried about how to value the $13.4 million spent on developing the EV bike. And on top of that, the company owes more in short-term bills than it has in short-term cash and assets by about $2.5 million. That's a tough spot to be in. Okay, so we've got this picture of a company that's getting more efficient, but is also walking a financial tightrope. So where do they go from here? Let's look at the company's own outlook. They're definitely up against some challenges, what we call headwinds. The global economy is shaky. And that always hits luxury sales first. In their main market, there are high taxes on fancy cars. And all the global trade tensions make rich buyers think twice before dropping a ton of money on a supercar. But it's not all doom and gloom. There are some serious positives, or tailwinds too. They say they still have a solid list of orders for their cars. Lamborghini is coming out with some hot new models like the Urus SE and the Temerario. And of course, the giant opportunity is the Lambda Scorpii bike launch in 2027. They're already setting up dealer networks for it across Asia and Europe. So, when you look at their official strategy, it makes total sense. It's all about finding a balance. Prudent execution is code for watch every penny and run the car business tightly. And selective growth opportunities is all about that big, risky, but potentially huge bet on the electric motorcycle future.
This content is intended to serve strictly and only as an informational, independent, objective summary of recent events, and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.